All right, let's go ahead and get started. Jeannie, I am recording now, so we're all set there. And I want to welcome everybody to today's stock market review for our Yummy subscribers. And if you are visiting us for the first time, welcome as well. We do record these, so the recordings will be in the usual area. If you're a subscriber, you have access to those, as well as all the written reports and things that we do on Sunday. So, Gene, without further ado, any announcements you have, go ahead, and then I'll jump in after you're done.
Terrific. Well, welcome everyone. Good to see you all here. And one thing to just remind everyone, we do have Stock Analysis Fridays on YouTube every Friday at 8 a.m. Pacific time. And I will post the link for that, so be sure to join us for that. And Bennett, back to you.
All right, thanks, Gene. All right, so let's jump in. Let me just go through the usual administrational items, of course, and that includes talking a little bit about the risks involved in trading. You need to be aware of those. It is possible to lose some or all your money trading the financial markets. We deal in a realm of probabilities, so past performance does not guarantee future performance. And you know, even when you have an edge in the market, you know, a proven system that wins more often than loses, you're going to have some losses, all right? It's just a part of the business. I've never met a trader that's never had a loss, okay? It's just part of it. They may not talk about it, but it's always there. So just realize that if you're going into trading, when you know you're going to experience some losses, you need to keep those losses in line with your overall edge, right? So definitely calculate your trade size, also known in the industry as your position size. That's how many contracts of a futures or something to trade, or shares of a stock or ETF. So that can be very carefully done. And we have a couple books. I have a couple books on that, on how to do that. Also, to realize that we may look at some stock opportunities. I'm going to be sharing some forecasts for the market. And these are based off my analysis, okay? So again, run those by your financial advisor or accountant or whoever manages your money to be sure any of these trades are suitable for you. And they know your personal situation. I don't, so that's really important to do that, okay? All right, and here are my books on money management up there for you. And I'm working on the new Art of Trading book, second edition. And I got Elliott Wave Techniques. So you can get these right on our website, best place to go. And then it will take you to our Amazon page. All right, so here is the economic announcements for today. Let me just enlarge these a little bit here, so you can see them better on your side. All right, so we start off today, Wednesday, November 8th. All right, and that starts with NBA mortgage apps, kind of at a standstill right now because people aren't doing much in the app industry. In fact, they're hurting, I think, right now. If anybody's in the real estate industry, let me know, okay? You can send me a private text or you can send me a public one. Love to know if you're in the real estate industry out there. Wholesale inventories coming out at 10 a.m. EIA Petroleum status report at 10:30. And then on Thursday, well, no FOMC, okay, today, so you're set for that. Thursday, November 9th, we got jobless claims, EIA natural gas report, Fed balance sheet, Friday, consumer sentiment, the weekly Baker Hughes rig count, and the Treasury statement. So pretty, I don't know, not exciting week in terms of economic announcements. But as long as we don't have an FOMC, you don't have to worry about the volatility in the market. All right, so when we look at charts, we're going to be using a trading system called the ART system, basically. But it also entails many different types of software you can add on to the ART system. And that's the OWL, PTF, TLM, ERI, scanning software, and of course, risk control software. I'm big on risk control, so that kind of has to be added to round out the system, so to speak. All right, so here's the chart on the Dow Jones that I did on Sunday. Don't forget, I published this for all my subscribers on Sunday, and it's also in the, and I give you the full-size chart, but it's also along with the written report. And you know, you have to have the written report to get this, to get all the details, right? So definitely download that. All right, so a couple things. I'm going to walk you through the chart. So back in this area here, we had a significant high on the market. I think everybody's kind of in tune with that, and that occurred on 2022. All right, so that was a high in the market, and that high has not been taken out yet. So that rested at around 36,952.65. All right, then we had a major change in trend in the market. And you can see that occurred really all through 2023 until we got really down to November of 2022, 2022. And then after that, it started coming up, and in 2023, it's been kind of a sideways market. So if you've experienced difficulty in trading the markets over this past year, that's why. All right, it's kind of like reminds me of the 1970s when the market was drifting for quite some time. I was a young guy then, but I can remember my dad coming home and saying, the market's not doing anything, it's drifting. And of course, I wasn't really in the market, so I just listened to him. But this is exactly what it was like back then as well, and it drifted. And so kind of interesting. So that's kind of where we're at now. I've isolated a recent high here, okay, and a recent low. So from my standpoint at this point, I might even move an area up here in the next coming weeks as a new support level to watch. But as long as we remain in this area between the high back here and the low all the way back here, I'm going to call that kind of like more of the same. All right, because it's kind of like a wide base channel, and it is pretty wide. It's almost 4,200 points. And I think I may actually, again, like I said before, draw a new support level here and bracket that market a little bit closer. Because if it goes below here, then I think it's going to go below here. That's kind of my thinking there. All right, so I'm kind of seeing, more of the same here right now. The market is not taking a definitive direction yet. Now, I know we've had very big bullishness in the last week or so, but we expected that because we had some selling in a 5-wave sequence that ended right exactly where it should. And I'll show you that on the 60-minute chart in a minute, where we actually are kind of like looking at these waves here, 1, 2, 3, 4, 5 ended. So that wasn't a surprise at that particular point. The real question going forward is, all right, is this the beginning of a wave down? In other words, is this a 1 of maybe an E wave? And this is a 2, and remember 2 can come all the way up and then head back down. That's the million-dollar question right now. Or are we going to go up from here? All right, that's another possibility. So we need the market to talk to us. We don't have that kind of crystal ball where we can go in and ask it what it's going to do. The best way to really figure out what it's going to do is to follow the market, kind of like a tail on a dog, right? Just follow it and see what happens. So what I'm looking for here is after this move up, we'll get some type of profit taking or pulling back, and then it's going to be very telling. Is it going to do that, or is it going to do this? And then if it does this to the upside, then we have to see if this holds or not. Because even if this is a wave 1 of an E wave, a larger E wave down, that means we could retrace all the way up here. But we should not go above that. All right? So we're going to watch that like a hawk, and that's exactly what I suggest you all do there at home. All right, in terms of a larger view of this, if this is a wave 5 on this daily chart, this is a wave 3 on the weekly chart. And remember, in terms of the Elliott wave I'm talking about here, there are 5 waves inside any impulsive wave, including C wave and A wave. But for this situation here, if this is a wave 3, which we think it is on the weekly, then these 5 waves down here represented our A wave. And then we had an A, B, C, B wave. And then we had a 5-wave down C wave. And we call that a failed C because it didn't go the usual 1 to 1.62 at a minimum of A wave. So it failed. Now, it kind of makes sense because if it had gone 1 or 1.62, I don't think it would have gotten down to the levels that we think it might have or should have gotten down. So when it rallied, when the market rallied off the failed C and went above B, that immediately puts it into a complex correction. And actually there's two outcomes of the Elliott wave when it went above B. Either this C is complete and this was a minor correction and we're going to head higher, all right, or we're in a complex correction and this is a D wave top, and at this time we'll see if we start heading down to E wave. So that's kind of the possibilities that could unfold here. But my feeling on this, based on what I'm seeing out there, is that this is an example of a long-term complex correction. And you can see that fairly clearly on the weekly chart. And the weekly chart has a red PTF on it on the COVID low. I'll show you that when I look at the live markets. And that kind of indicates that this is all part of a larger correction that should resolve itself, not to the upside, but significantly to the downside. So that's kind of my take on the markets. And of course, you can disagree with, all markets are all about, disagreeing or agreeing. That's what makes a market, right? So, but this is my opinion on what I think is going to happen. I think we're going to have a major breakdown at some point. Not exactly sure when. I thought it would have come already, but with the complex correction unfolding here, it delays things. So that's kind of where we're at now. And if anybody has any information they want to put in there or thoughts, feel free to do so. Now, another quick talk here on interest rates. All right. So there's a lot of talk that the Fed has done. Okay. The interest rates, they're not going to raise the interest rates. They're not going to lower them, but they're not going to raise them. All right. So there's been some debate here, and the Fed Watch has got the percentages of the Fed being done pretty high. Okay. So the tendency is that the Fed could be possibly done, which I think is aiding to this rally we're seeing in the markets. Now, doesn't mean something can't come out of left field to cause the markets to sell off, but that is another reason I think that this rally has so much enthusiasm in it right now. But we'll see. As far as I'm concerned, if it doesn't get above the D wave high of 35,679, then it's not as enthusiastic as it needs to be, so to speak. All right, so that's kind of where we're at now. If anybody has any thoughts on the interest rates, let me know, okay, out there. I kind of thought we'd get one more 25 basis point raise by the end of the year, but people are saying not so, okay? They're kind of indicating maybe not. All right, so we'll see what happens. Real estate is I'll get to real estate in a minute, but let's just go through here a little bit more. So here is this target that we looked at that was reached, week before last. So we were expecting a rebound once this target got hit, because that represented, basically the 5 waves down. This was a 1, 2, all right, and this was a 4, and these were the impulsive waves down, indicating the end. So that's not a surprise that the market bounced off there. We were certainly expecting that, and now we're just going to have to see if wave D high holds, okay? So that's where we're at now. All right, this is the one I like to show, of course, showing how the home market is so blown at this point, particularly to the upside. This is the Case-Shiller Home Price Index versus the CPI. And the idea is during a very orderly time, you have areas where the Case-Shiller Index, which is in red, moves back to the norm of the or close to the CPI. Okay, it's not going to go below it, but it's going to come close to it. But when it starts to expand, like it did here, this was a 2008 financial crisis, you get a move back to the mean, so to speak. Now here we are here, okay, and the expansion is really twice as great as it was back here, okay? So that's indicating a bubble, all right? And we should get a move back to the mean. And if you think about the price of housing in your area to what people can actually afford, it's getting a little out of touch, right? And so the purpose of housing, of course, really is to provide a place for people to afford and live and grow in the whole 9 yards. And you're getting that blown out of whack here because the prices are just too high. Now, interest rates, of course, play a role in that. But if prices were to come down, all right, I think people would start buying again, even at these interest rate levels. So it's kind of the supply and demand. The reason prices haven't really come down much is simply because, all right, let's see, Al, I think you got the mic on. Let me mute you there. Let's see. Hold on one second. I'm going to mute you there. Anybody else has that, just mute for a little bit, and I'll give you a chance to come on. All right, so the back to this for just a second here. So, you know, if people aren't selling their houses because they're happy with their low interest rate that they're currently having living in their home, then that's going to keep the supply down. All right. And of course, prices so high is keeping the demand down. And what could happen here is if the economy slips and goes into a recession, then if people lose jobs, they're going to be forced to sell their home, even if they don't want to. And that will, of course, increase supply. And they may have to get out pretty quickly, so the prices may have to drop significantly before supply reaches the low level of demand. And that could close this gap here at some point. So we may see that in 2024, especially if rates stay where they are, basically. All right, even if they don't go up, the rates are still right now high enough that people don't want to put their homes on the market. So if that stays for 2024, we'll see. Now, if prices come down and we see a better surge in, or a more healthy surge, I should say, in home selling, then that's pretty good. All right, and then the Fed may even start to lower rates in 2025. And you know, it's the business that we're in terms of cycles, right? You know, you have expansions and pullbacks, right? So they will lower rates at some point, and that will spur another boom at some point. But I think we have to go through a pretty tough 2024 before we get to that. All right, so that's the issue there. And if anybody's in real estate, feel free to chime in. But I'm just looking at the charts, and I'm a chart guy and a graph guy. So if I see something like that, it kind of concerns me a little bit. All right, so let's get out of here, and I'll take a quick look at the Dow here. So one of the things I just wanted to show you, here's our long-term chart. This is the COVID low. I have three charts, okay? Weekly, I should start with this. Weekly, and then I have, over here, I have the 60 on the far left and the daily in the center. So if you're visiting us for the first time, I use this type of multiple time frame analysis when looking at a symbol. And so I've got the Dow Jones index up now. And on the far right, on this weekly chart over here, this was the COVID low, all right? And it created a red PTF. Now this indicator is kind of an interesting indicator because it has a 75% probability. But of course, it's just telling you at this point, during the next major correction on the Dow, we should go below that COVID low. All right, it doesn't tell you when, it doesn't tell you if you're going to have a rebound before that happens, but it's just indicating that. So if indeed we are in a complex correction and we actually move down from here, all right, and start taking out the bottom of what was that failed C wave over here, then chances are our next stop is the COVID low. Okay, so that's a pretty significant bottom. That gets the markets back in the teens. So, you got to watch those support levels because it's also possible, all right, maybe we'll get a move up before we get the big move down. So maybe we're just a little too early. Is that possible? Anything is possible. I don't think so. I've done the analysis on the longer term charts, and I think we are in the midst of a complex correction that should resolve itself to the downside. All right, so that's kind of where we're at now. And also too, on this daily chart here in the middle, what I did here is I just took an inflection point. I took the previous high and the previous low that was just put in, okay, the bounce off that bottom. And this is a target zone for an inflection point, which is nothing more than really a profit-taking target. And so we've reached there. So again, I think I probably think at some point here we'll see a little pullback here, and then it's going to be telling. Is it going to go, or is it going to pull back again a little bit and drop? So we're kind of going to watch and see that, and that may take a couple of weeks to unravel. So I don't think the markets here are necessarily at a point where, you're going to have a 1,000-point sell-off at some point tomorrow. I don't think that's going to happen. I think we're going to maintain these levels, maybe a little bit more bullishness through the holidays, and then we'll see what happens. Now, if we look at the S&P, all right, very similar to the Dow, okay? We've got that move up. We got the red PTF on the weekly, so mimics this, not surprisingly so, okay? So we'll see. All right, now the NASDAQ's a little bit different of an animal, okay? Whoops, we got this big bar down here. All right, so the NASDAQ's a little bit different of an animal. And the NASDAQ situation here, all right, is showing, based off this indicator, the PTF, one more high as possible. And so the power of Google, the power of Meta, the power of Amazon, the power of Yahoo may sustain itself and keep this market floating a little higher for a little longer. Okay, so I think we got a little bit more of a move to the upside. So I'm not quite basically crying wolf here and say get out of the market. But at this particular point, if we make another high on the NASDAQ, that may be a time to think about lightening up a little bit, okay? So that kind of thing. All right, I want to take a look real quick at a couple other items here. I wanted to look at the real estate ETF. I like to look at CBT. That tends to represent not just commercial, but some housing too. And as you can see, what a big move down, really, since really 2022, since the market sold off. Now, what's interesting here, okay, is we had a green PTF and it went red. So that's interesting, okay? That indicates to me we've got more movement down coming. I've got a red here, more movement down, but we have a green over here. So we're kind of in the midst, I think, of some maybe in this market, okay, we had some great shorts that worked a long time, but maybe time for some profit taking. And any profit taking that we get to the upside, as long as this remains red, then that's all it is, and it should result itself in the downside. So maybe along with interest rates staying stable, people will have a little bit more enthusiasm, but it should be fairly short term, okay? I don't think we're going to get as much as we thought, and of course we're going into the winter months, which is usually the worst time in real estate anyway from a seasonal standpoint. All right, the other thing I wanted to show you is cryptos, and I'll just go to Bitcoin, GBTC. Now, we've recommended long positions in this for quite some time, and we still are. You're going to get a pullback, all right? We're kind of ratcheting up. Every time it makes a new high, we ratchet up our fib retracements. So we're at, what, 27? I think it's due for a pullback into the lower 20s at some point, but then should resume itself back to the upside. So we're very bullish on this. I think ultimately it is very possible to get above 55, okay? And that would be pretty huge. But if you got in back when we were talking around $8 to $10 on this, you're done really well already. But I do think there's a lot more move up. Now, if you wanted to take some profits on this next move down, you could use this bottom of our pyramid for your stop, because that's how we trail the stops. You have it here too. So you could certainly lighten up or get out, wait for the pullback, and then go back in, because the longer trend is still up, okay? That type of thing. So we should be pretty good there. All right, so that's GBTC. I'm bullish on that, and I think that'll do well even if the market does go into a major correction. I think it'll do well even if it doesn't. So I don't think that's a bad place to have your money. All right, let's take a look at USO. USO is the ETF for crude oil. Then I'm going to take a look at gold, and then I'm going to take a look at silver. And then if we have any time left over, I'll be glad to look at anything you want to look at. All right, so USO coming down, all right? We're certainly seeing the gas prices come down here where I am in Arizona. I think we're at, what, $3.50 a gallon or something. Pretty cheap here. And basically, it's not done yet. It's still coming down. I think this is an impulsive move on the weekly chart. I think this is I'm going to call it a 3, but it's an impulsive wave, and this is the corrective wave. And so I think we're kind of going to work our way up into this area here at some point. Okay, so right now we're in the pullback time, and that's not over yet. Looks like it's going a little bit lower. So this bottom we think is a major bottom. That doesn't mean after this big pullback we can't come back down to it almost and have it turn around. But I do think it's a bottom. So you want to keep your stops. If you're in this for the long haul, you got to keep your stops pretty low here. I would have them under this pullback here. We shouldn't go below here. If we go below here, then that chances are that's not a bottom, okay? So that's kind of where we're at now with that. All right, so on silver, I want to take a look at silver because with the silver market here, we've got a pennant forming on the weekly chart, and there she is right now. Now, a lot of people on YouTube are recommending silver at 26, all right, and so forth. But as you can see, it's come back down. People are still recommending it. But if you look at the charts, okay, you can do the timing a lot better, all right? So when somebody recommends something, whether it's silver or stock or whatever, check the technicals, all right, and see where the market really is in terms of the best time to go into that market. Maybe they're right, okay? Maybe they're going to, you know, the fundamentals long-term could post very well for silver, all right, especially if the market sells off. So maybe that will happen, but you won't miss it if you look at the technicals, because if it does start to take off, you'll see it in the technicals, all right? So that type of thing. So I think it's in a pennant. It's, you know, we got a red PTF here, a green one here. So in a channel here, you can see that channel right here, okay? For God's sakes, even a smaller one inside that. And that's, you know, so the pennant, we're in the pennant. And eventually if it breaks out here, then it should go. If it breaks down here, we're still going down, okay? So that's, pennants are kind of useful that way. So that's that. And then the last one I just wanted to look at real quick was gold. And gold, if I'm going to open up this chart here, all right, and then come back here like that. Okay, so this was a wave 3 high, and that was back in 2011, right? So that sparked the market. And then we had a fairly good correction all the way down that lasted a long time, 5 years, long-term chart. This was 4. And now since then, the market's been up, all right? It did clear slightly here, okay? The wave 3 high, okay? So if it's a failed wave 5, we're done, okay? But that's not what the PTF is saying. The PTF is saying we're going higher back into the 5. We have the highest momentum that occurred, which is what is being measured by our owl here, and we have bearish divergence here when it hit the high. So that, okay. So that's kind of what you would expect if this is a 5, right? And it looks like maybe we had a 3 inside the 5, 4, and so maybe we're heading back up on gold. So that's kind of where we are. My target of gold is probably around 210 to 230, okay, on that. And, you know, it looks like it's coming down again short term because it looks like probably coming down to 179 to 175, and then should rebound off of that. So we'll kind of see how that goes. So that's where we are now. All right, so let me, Al, I can't look up all yours. There's too many, so give me one, okay? I only got another 2 minutes left. All right, let's see. Let me go to UNG, okay, and take a look at that one. So Al, type in which one you want me to look at again, okay? Just type in 1 or 2, that's it. All right, so this is UNG. Now, UNG is the ETF for natural gas. All right, and basically, this is a classic bottoming right here that we're seeing here. Very messy. All right, this is what happens sometimes. When you go in early off a bottom, you never know if you're going to have a V shape or if it's going to go into this messiness and tie up your capital while it's working its way out. So, you know, you got to make a decision here. We got a support level here that looks like it's going to be taken out. So if you wanted to get out of the mess and get out and try to get back in when it clears the red line, you could, all right? You'd lose 2 points, but you wouldn't have your money sitting there for a while. Or if you don't really care and you got your money in there and you think this will basically reward you, then this is your bottom here, okay? And keep your stop there. And that's a good place to have your stop if that's your opinion, because the thing is that what you're saying is I'm long because I think that's a bottom. And if it's not a bottom, then you want to be gone, right? So not a bad place to put your stop. The potential in this trade is huge. If it breaks, you'll probably triple your money. all right? But at this particular point here, it's stuck in the channel. So if you're just watching this today, I'd hold off on going into this, especially with a movement down right now into it. So we'll see if that bottom holds. But if it gets above this red line here that I drew on this top, so we see some momentum coming back and it does that, that's a great buy point. You'll still do really well. All right, so if you're not in it, I wouldn't go in it right now. If you're in it and your stop is at the bottom, well, you know, you're just gonna have to wait and make sure that we'll see if that stop holds, and if that is a bottom, you'll be in good shape. You'll be rewarded for the hold, okay? All right, Al says I can take my pick. Oh boy, that's a tough one. I don't know, let's see. How about we look at your first, let's just take the first one, DD, how's that, okay? All right, DD, I'm not sure if you're looking for a short trade or a long trade. It is moving down here. The PTFs don't have much of a profit distance from where prices are. So a short trade here, I probably wouldn't do at this particular point. It looks like we have a green PTF over here. So I'm thinking this move down is not serious in terms of coming down like this at this point. As long as this stays green, then any movement down, all right, even if it's very bearish on the short-term time frames, is considered not a change in trend, but more of a profit taking or just a pullback in the movement that's still to the upside according to the weekly chart. Okay, that's how I read that. Okay. All right. Well, I hope this helped everybody. All right. Be interesting to see what the Fed actually does, I think, on the rates towards the end of the year. We do post this. We have recorded it, so we do post this analysis on two places. We post it for you in the subscription area, and also we do put this on our YouTube channel as well. All right, but you saw it here first. All right, now Gene's putting a link up there on Stock Analysis Fridays, and that is something we do every Friday. And you can bring your stocks, and we look things up, and we basically try to find the best trades based on the stocks everybody brings. The funny thing is about Stock Analysis Fridays, it started out as just a service where you could check, you know, your positions and see if things made sense based on our software tools. And then it turned into almost its own stock picking service because everybody brought quite a few stocks. And by the time we're done, you're going to find some that you weren't aware of. So it's really kind of cool. All right. And of course, the benefit for us here is we get to show off how our trading system works. So it's a good win-win for everybody. Okay. Good win-win for everybody. All right. So I think that is it for today. And I want to thank everybody for coming. Good turnout today. And I hope everybody's doing good as we get into the fall, close to getting into the winter, right? All right, so Gene also put the link up for the YouTube. So Gene, I'm gonna turn it back over to you. I have to run, I gotta get ready for the client support. All our clients, of course, are welcome to join us. And if you have any questions on like the course material or the software, this is why I do this once a week. And I'm the only one that does it. So if you have any questions or trading questions or course questions or software tweaking you need to do, come to that and I'll be able to help you. All right. So you have a really excellent week and I'll see you back here next week. Gene, back to you.
That's a great session. I also too, Bennett, love when you do the real estate because it gives you sort of a complete view of the markets because I think everyone sort of is looking at real estate. That's important. So terrific. Well, everyone, I posted links for you to join us for Stock Analysis Friday, every Friday on YouTube at 8 a.m. Pacific. And also, too, this event is going to be posted on YouTube as well. And it'll be ready in a couple hours later today. So feel free to check out the recording there. All right. Well, you all have a great day, and we'll see you next time.